Rohr here with an early, concise highlight on Wednesday, May 9th, 2014. It's currently 7 a.m. U.S. Central Time, and we'd like to say it requires another global view as we put out on Monday, but anyone wanting to see what the foreign exchange is up to should reference that Monday video analysis because, frankly, there just isn't much movement there right now. But the equities and govies, on the other hand, have been quite active. And looking at the macro side of the picture, of course, what we've had is bad news has equated to bad news of late. The only other U.S. influence today is kind of important, though. At 1 o'clock this afternoon, Central Time, we're going to see the FOMC minutes. So, seeing how that bad news is affecting the actual short-term trading view, we can see how the weak news overseas into the U.S. yesterday actually caused the S&P future that had held the pullback off Friday's gap higher from Thursday's 1967.70 close that we had highlighted in yesterday morning's video, that this is the key level where the gap just being filled and the market bouncing a bit from it on Monday didn't seem to mean a whole lot. But as you got below the 1967 area on Tuesday, that means you're overrunning the gap. You're turning the strength into the response to the U.S. employment report from Friday that looked pretty good, also above the top of the channel this week at 1975, which was very important. And we see where the market left a high there, so it was defusing the upside acceleration from last Friday. Then it was breaking support, and that left the door open toward a test of the lower overrun resistance that's now support on the downside closing price reversal on the daily chart from 1953, associated with that period from 2 weeks ago Tuesday, down break below the 1954 level, and ultimately the tolerance of that downward closing price reversal was 1955. So we say, well, we're going to get back, if we fail 1967, to 1955 to 53. So there were your technicals in action. Yet the market held by later on in the day and had recovered a full $7 from the low, which puts this more in a trading affair. As we also noticed coming in yesterday morning before the opening, the market was trying to put in a somewhat of a base in the hourly stochastic, but that's often not convincing when it happens from midstream here, and that it did leave the market vulnerable toward more pressure to test 53 and then turn up. And just as we said, the short-term 30-minute stochastic had already turned up. This was a interesting development. Of course, it took more pressure, but this now looks more like real basing for a swing back up to test those higher resistances up at 1967 and maybe even the down break and top of the channel again up into 1973 to 75. What's also interesting about yesterday is the hourly MACD did not really try to escape, but the 30-minute tried to say it was out on a lower runaway, but it was incumbent upon the bears to break the 1953 support, or that was going to begin to reverse. And that's exactly what we got.